I think we, like some others, discovered the Eurodollar system for the first time, which was something I've heard of, but I'd assumed it was just like this was just something to do with the Fed, and it's the way they distributed dollars in euro. I didn't actually have any idea what it was, what it meant, and it's kind of this. I don't even know how to put it. We were talking about it last night. Is it basically a group of people who've just decided to create their own money?
Essentially, yeah. I would describe it as bad technology. It's basically the ramifications of having money that's not perfect or that has all these very clear limitations, right? So it's money that is both not completely auditable, and that is soft and inflationary enough that it encourages people to borrow it to buy other things. So the combination of it's basically has an incentive mechanism to keep growing, and then it's hard to track where it is.
Right.
And that's a bad combination.
We need to go back a few steps on this and just go get into the absolute basics of what it is. Because I know there were some questions regarding this. I think some other people are like, hold on, what? It's just a group of offshore people creating their own money? I mean, we actually talked about it. We were like, what, could we create our own one? Could we create the Pete dollar? And we just trade it between ourselves and get Jeremy on it? I mean, is that essentially what it was?
Well, if for example, let's say I owe you money, or I say you know what, you get us around of coffees and I'll pay you back later. We've just created credit.
Yes.
And that is now an asset for you and it's liability for me.
Mm-hmm.
And it's based on the fact that you're pretty sure I have the money at some point, we can settle it. And that's essentially what modern money is. Most money that we know of as money is credit, right? So for example, our deposits at a bank are the bank's liability. It's a form of credit, and they create new broad money when they make loans, and so all credit is basically all money in the current form, the currency that we know is a type of credit, and so in that sense, yes, you create it. Any two parties can create it, even us. But of course, it's much different when it's created at an institutional level. But yes, the short answer to the question is you can create money anytime you essentially make a claim that you'll pay someone back later, and then they go and mark it down as an asset on their book.
Okay, so where did the Eurodollar start, though? How did it first get created?
Well, that goes back to the Bretton Woods era.
Yeah.
I mean, the funny thing is you could actually go back further because are you familiar with the Hawala system?
Nope.
So Hawala money transfer system, it's like a money transfer system that went from it still exists, but it went from India to Africa all across the Silk Road.
Okay.
And for hundreds of years ago, 1,000 years ago. And basically it's if you want to transmit value and you want to bring gold with you, how can you do it? And one thing you can do is rely on a set of trusted intermediaries. So you have a network of Hawala money brokers, and they know each other. They know each other's reputation. They know each other's tribe and family, and they know each other very well. So basically, one person in city A can go to a Hawala money dealer and say, I want to send 10 ounces of gold to this person in another city. And that person in the city can then go to a different Hawala dealer. And those Hawala dealers, they connected and they basically agreed to transfer value despite the fact that no value was physically transferred. One of them owes the other one now. And so they have these going back and forth, and they keep basically a ledger between themselves.
Okay.
So what essentially that is a decentralized ledger. It's kind of like analog Bitcoin.
Yeah.
Back 1,000 years ago. And it still exists. It runs parallel to the banking system. And so if you want to send money, that's one way to do it. If you don't have banking access or if you want to go around the banking channels, that's something that exists. And that's pre-Eurodollar.
Right.
The Eurodollar system is basically just a modern version of that. So these systems pop up anytime you have some sort of shortcoming with money, because you can't just teleport gold to someone. You have a problem. That's where we get the Hawala system. And because dollars have limitations, we get the Eurodollar system. And so the Eurodollar system is basically just offshore dollars. And it's, it kind of, you can trace it back to the Bretton Woods era. So say the 1950s, for example. You can trace it all the way back to then, maybe the 40s. And it's basically just dollars outside of the United States that are loosely tied to the fact that the dollar is the global reserve currency, and that therefore they're tied into that network effect. But
there are no real dollars in this system.
There are some. There are physical cash dollars overseas. I mean, it's funny. There's more $100 bills than there are small bills, and most of those are overseas. But that's a very small piece of the puzzle. Most of the offshore dollar system is credit. It's basically those series of claims basically banks that owe other banks or corporations that owe dollars to banks. And all of that is offshore. So, for example, the Bank for International Settlements estimates that there's like $13.5 trillion of dollar-denominated debt that's off the United States. And it's mostly not owed to the United States. For example, an entity in Europe might owe money to an entity in South America in dollars. Or China, now they take a lot of their dollar surpluses because they run big trade surpluses with the United States. They get tons of dollars. They used to buy treasuries with them. Now they go and they make loans to countries in Africa, countries in South America. And so you have this huge system of dollar-based debts and credit and banking systems outside the United States. And the difference is that in the United States, all the domestic banks are tied to the Fed. Basically, the Fed, in Bitcoin terms, the Fed runs a full node for the onshore dollar system.
Yeah.
They know roughly where all the dollars are. Each big bank is like a partial node, and then the Fed basically pulls those together and keeps track of where all the dollars are. But if a dollar is like outside of that system, it's kind of like a side chain, and even the Fed doesn't really have a way to audit it. And so those are dollars that exist outside of it, but then are loosely connected to it.
Didn't Jeff talk about, though, that these institutions using the Eurodollar have a ledger between them that they all agree on?
It'd be a series of ledgers. It's not like one. There's not like one spreadsheet that they're, pooling around.
Okay, so is it just really a group of people agreeing who owes what money to who?
Yeah, a sophisticated version of that. Yes.
I'm just trying to think. How does that inflate? Does it inflate? Are they able to create their own new Eurodollars?
Yes, because whenever an institution, domestic or foreign, loans money, they essentially loan fiat currency into existence. So if I promise to pay you back $5, you now have $5 in your asset, and that's money for you, right? And so as an example, if I go to my bank and I want to get a car loan, I go to the bank, I say, look, here, I'm creditworthy, I want the loan. So they put money in my account that I can then use and give to the car dealer. They've created new broad money that is a liability for me and an asset for them. And so that's essentially how it works. Basically, and actually Saifedean in his book, The Fiat Standard, goes into this, the kind of the nuts and bolts of it, that essentially money creation as we know it, like how you quote unquote mine fiat currency, is you make loans for the most part. There are ways to bypass this system by the government. That goes into the whole money printing thing. But most money creation historically happens because banks are making new loans.
But there's certain rules the banks have to keep to in terms of creating these loans.
Yes, because they have assets and liabilities. And if their assets fall below their liabilities, they're insolvent.
Yeah.
And so they have to make sure that when they make a new loan, which is a new asset for them, that it doesn't just go away, because they have capital on the line, and their assets are some mix of risky or conservative loans. So, for example, conservative loans would be like they make 30-year mortgages to someone with a perfect credit score, or they own U.S. Treasuries. Those are pretty conservative assets. The riskier assets might be making car loans or credit card loans or things like that, right? And so if some percentage of them, like let's say 10% of their loans don't get paid back, they're insolvent. That's roughly their buffer. And so they have to be very careful. That's kind of the constraint on this. That's why I don't have like a quadrillion dollars, created every week, is because if those loans default, that bank's at risk.
And the US obviously can monitor and manage the creation of dollars within the United States, but they really can't do much about the creation of Eurodollars.
Not much, no. I mean, yeah, they're basically outside of the regulatory scope. So even in the United States, they have a number of levers they can pull that accelerate loans or decelerate loans, but they don't have fine motor control over it, because at the end of the day, it's a bunch of individual transactions. People have to, demand loans, and then banks have to be willing to make those loans. So there are strong and weak levers that the government or the Fed can pull to accelerate loan creation or reduce loan creation, but it's not like they can just pick a number and have that many loans created. Then when you go outside of the U.S., because it's outside of the regulatory purview, yes, they have even less control over that system, and they have very little way to audit that system.
And do we have any understanding of what the Fed thinks of this system? Is it good for them, or is it bad for them?
It's different over time, and that's actually where, I mean, Jeff, he like you pointed out, he collects all the quotes from all the different officials and
Yeah.
everything like that. One of the famous quotes from decades ago was, "It's our money, but it's your problem." That's been one of the old quotes.
But does the creation of the Eurodollars, does it like the growth of the Eurodollar, does that cause I'm trying to think how to word this. Does this have economic implications for the dollar in the US?
Yes, I would say it structurally contributes to trade deficits in the United States, and it also causes financial problems when that system contracts. So if there's a severe recession of some sort, like in the COVID crash, March 2020, or during the subprime mortgage crisis 2008, when large events like that happen, it ricochets back and it hurts U.S. markets. And the reason for that is, so if you go back to the BIS, they say there's over $13 trillion in dollar-based debts. Now, there's also, depending on the number at any given time, we just had a pretty big market correction, so probably numbers are different. But let's say, roughly speaking, if you look at the IMF data, the U.S. data, foreign assets are something like 40 or 50 trillion in U.S. denominated assets. And that's built up by the fact that they've on average, not every country, but on average, they've run trade surpluses with the United States for decades. Let's say China, for example, or Switzerland. And they get all these dollars, and then they buy U.S. assets with those dollars. So it could be treasuries. That's what they used to do. Now they increasingly buy stocks. They can buy U.S. real estate. So a Chinese firm could come in and then buy U.S. commercial real estate, or they can even buy a bunch of single-family homes. They buy U.S. assets. And one problem is that if there's ever a contraction in the Eurodollar system, they start selling because they basically need dollars because, credit's being crunched. It's owed in dollars. Debt represents demand for that currency. So if you have a dollar-based debt, you have a demand for dollars because you have to service your debt. And so when you have these kind of crunches, everybody wants dollars at the same time. And one way you can get dollars is by selling your dollar-denominated assets. So, for example, March 2020, there was a dollar shortage. And so the foreign sector in aggregate started selling treasuries to get dollars. So the treasury market went illiquid. And then the Fed had to reliquify it by creating dollars to buy treasuries. So they basically had to move the knobs around for how many dollars are in existence versus how many treasuries are in existence, at least outside of their balance sheet, to placate the Eurodollar system, essentially.
And just to repeat, why is it you think the Eurodollar system is a bad system? You think it's bad money?
Because it's opaque. It's hard to audit. I mean, imagine like a blockchain that you don't really know the supply of, and you don't fully know the rules for how it's new units are created or destroyed. Like you kind of know, but you don't really know.
Is that Ethereum you describe it?
Just any. And then number two, because it's fiat currency, it's just there's no constraint on supply really, other than basic rules, and it encourages debt accumulation because there's a natural incentive to borrow in something that gets weaker over time to buy something that gets stronger over time, as long as you don't get over your skis.
Right. So why has it expanded so quickly?
Because of that incentive. Because there's not a lot of checks and balances on it. And then two, a couple reasons. One is if you want to make a foreign loan, right? If you want to loan money to someone in Argentina, as a particularly extreme example, you don't really want to do it in their currency, right? Because they're going to pay you back in severely weakened currency. Mm-hmm. So you say, okay, I'll loan you money, but it's going to be in something like dollars or euros or yen. It's going to be in an international, more stable currency. And the dollar is by far the biggest international lending currency because of network effects and because of the reserve currency status. And so you'll loan someone in Argentina in dollars, but not their local currency. And so now in some countries that are less extreme, like let's say Brazil, they have the option to borrow in their own currency in many cases, but they'll pay a higher interest rate. So if they want to basically take some risk and get a lower interest loan, they might be willing to take a loan in dollars. But the risk is that if the dollar ever severely strengthens compared to their cash flows, which are probably in Brazilian currency, they could be squeezed on that. So there's natural incentives for that to kind of grow over time.
Okay. This might sound super simple, but I just want to walk through the logic of how this works. So an Argentinian business wants to borrow dollars. They borrow from this bank. The bank then creates the loan, which becomes a liability for the bank.
It becomes an asset for the bank.
Asset for the bank, sorry, liability for the borrower, sorry.
Yes.
So but the borrower then needs to access these dollars. So do they go to how do they physically get the dollars? Does that get transferred from that bank to their local bank?
Yes.
So there will be a bank in Argentina that will accept that.
Yes.
Where's the actual money?
It's just a ledger. I mean, for example, in the United States, our broad money supply is over $20 trillion.
Mm-hmm.
Something like 90% of that is not paper money.
Yeah.
Paper money is a tiny percentage. Most of it is literally just ledgers. My bank says I have this much in my account. Let's say you're an American. You have a certain amount in that system. You could have dollars in your offshore account that's outside of that system. That's all basically, it's all ledger based.
But so they transfer it to the Argentinian bank. So what actually happens there though? Like, because what I'm trying to understand, I know this is going to sound super dumb. What I'm trying to understand is what has the Argentinian bank taken on? They've updated a ledger to say this person's account now has, say, this $1 million. Okay. But say this person comes in to withdraw, they want to get some of that, say they need some cash from that. Where's that supply coming from? And what is the relationship between the two banks on this, say, $1 million? So, because this is the bit I never understand.
Yeah, well, one is that the vast majority of it would never be withdrawed. Okay. If you tried it, they'd just be, we don't have the physical dollars.
Okay. But
that even happens, ironically, in the U.S.
But let's say even they just spend it. They go and pay another supplier $200,000.
Yes.
What is the relationship between the ledgers? Because this is why I can never get my head around.
It's a series of ledgers. There's no one spreadsheet that they all have.
Yeah.
But one of the closest would be the Bank for International Settlement that tries its best to keep track of all this. But each bank is managing their own ledger.
Yes.
And because it's double entry bookkeeping, their ledgers, they have to reconcile with other banks. And there can be both loans and securities.
Yes.
Right. So a larger entity would generally borrow, could issue securities, bonds, whereas smaller entities will generally use loans. And you use a mix of both as well.
I still don't get it. I'm going to sound. Do you understand it?
I think so, yeah.
Explain it to me. So what happened? What has the Argentinian bank done?
But I think you're getting hung up on the idea of actual dollars moving. And that
no,
it
doesn't even need to be that. But at the end, I don't understand the actual movement of the money.
It goes back to the Hawala system. The whole point of that
all
system,
promises.
It's all promises.
So what does the Argentinian bank? They've got a commitment to pay back.
Yes.
The $1 million to the other bank.
Yes.
Right.
And generally, the way it'll work is a European bank will loan dollars to a South American bank. That bank will then loan some to their local corporation that actually makes something.
Right.
So they owe their bank. That bank owes this other international bank.
Right.
And you have this chain of. So if one entity defaults, it can default up through the chain.
So this is how we just get massive expansion of the money. Then it's just all this credit being created.
Yes.
It's crazy.
I think it'd be interesting. What are the benefits from this system? Has the broader economy, has there been social benefits,
growth?
I guess one of the steelman cases for it is, let's say you are in Argentina. If there was no way to lend dollars to an entity in Argentina, would anyone loan them anything, right? And it would be hard to then bootstrap a new company, bootstrap some sort of, operation. If you don't have domestic stock of savings and capital, and you want to access a more developed, richer country's capital, that's a mechanism that allows it to happen. Now, and there are some countries that have made strong use of it. I mean, Taiwan, for example, right? I mean, there are countries that, started impoverished, they borrowed money, they used it extremely productively, and now they're very wealthy, or pretty, far more wealthier than they were. They have positive capital now. They have, pretty high per capita wealth. They're productive. They have current account surpluses. So that's the best case for why this system exists. That there are people making use of it. If no participants were ever getting value out of it, it wouldn't exist. It's basically we lack other language. We lack other ways to transfer value in a way that we expect it will be paid back.